Hi, this is Kevin Hickland again, just with another insurance tidbit of information for you. And this is relative to the person who's in business, either as self-employed or in a partnership. Firstly, around public liability cover, a number of people ask me, what's public liability cover and what is indemnity cover? Well, I suppose in just a very, very quick word, public liability is about an occurrence. So if someone was to walk out of your door, slip over, break their leg, break their back or whatever, that's where you become liable for that occurrence, and therefore that's when your public liability cover will come into action. Personal indemnity cover is more about the advice process. So if you're like an accountant or a lawyer, in an insurance risk advisor, where you're actually imparting advice to people, then indemnity cover is covering you or covering the person who's given you that advice should something go wrong. Myself, as an example, under the Act, I carry my own personal indemnity cover, so that if that does occur, that's where my indemnity cover will come in. Now, the last point I want to cover off very quickly is around the business partnership. Every business partnership should have in place a shareholders agreement. Encompassing that shareholders agreement should be that of a share purchase cover. What's a share purchase cover? You might say, well, if the company is valued, as an example, at $1 million, and Jim and Harry are both in the company as 50% owners, if we take the situation where all of a sudden shareholder A passes away, and it means that shareholder B will then have 100% of the shareholding, how does the estate or spouse of this shareholder get their $500,000 worth of 50% of the value of the company? And this is where share purchase agreement comes into act, whereby you have life and total permanent disability cover, where we insure both shareholders own either way. So the event of a shareholder, his or her death or becoming totally and permanently disabled, what it enables is a very simplistic way of transferring the shareholding with minimal fuss, and of course it also takes away the pressure on the remaining shareholder who has to raise that $500,000. Do they do it by a bank loan? Do they use equity in their properties? The easiest, simplest and most inexpensive way to do it is to make sure in your shareholders agreement you've got a share purchase agreement and you've got share purchase cover in place between the shareholders. And I, of course, have got experience in that area. More than happy, just press click here and you can talk to me about how I can assist you with your shareholders agreement and share purchase cover.